Hey, it's Marcel with Guaranteed Rate, and I just wanted to give you a quick market update. I tell you what, I have never seen anything like this in my entire time of being in the mortgage industry since 1998. It is just absolutely crazy right now. So typically one of the biggest indicators to watch to see which direction mortgage rates are trending is going to be the 10-year bond. Right now the 10-year bond has dropped down to below 1%, and so what that technically should mean is that mortgage rates should be absolutely ludicrously low. And so I'm talking about probably in the lower to mid twos, but they're not there. And so I wanted to explain to you a little bit about the market and kind of what's going on. So right now, even though the Fed funds rate did end up dropping, the attempt there was to basically increase liquidity in the market to kind of give the market a little bit more stability. I don't think it's really had that effect. In fact, we've been seeing 1,000-point swings every single day up and down. But if you look at the 10-year, you're still thinking, well, interest rates should be absolutely phenomenal, which they are, but they are right now in the lower threes and they're not in those mid twos. And so you have to ask, well, why is that? Why is it if the 10-year is so low that mortgage rates aren't necessarily following suit? And in fact, the difference between the 10-year and the way mortgage-backed securities are trading right now is pretty substantial. A lot of that has to do with demand. So if you enter an environment where most of the population has the ability to refinance a home and actually have a benefit, the industry is not created to handle that much volume. It is absolutely impossible. And so what most of the mortgage companies and big banks have done is they basically bottomed out. It doesn't matter if all of a sudden the 10-year drops down to, let's say, 0.75 or even 0.50. In my opinion, we are very, very close to the absolute bottom that we're going to see in interest rates just because of capacity. Literally, I heard about some bigger banking institutions right now talking about doing refinances and mandating that they actually wait 4 months before they can close. So literally, you're going to be looking at 120 days before you can close with some of these institutions. Now with Guaranteed Rate, we can still close relatively quickly, but our focus is always going to end up being on those purchase transactions. So if you are buying a home, we definitely have capacity to help you out very quickly, but keep in mind that right now the volume is truly historic. That means that if you're interested in buying a home, make sure you cooperate with your mortgage company. Get the documentation in as quickly as possible because any delays on the front end can really have a huge impact on the back end. So if you have any questions on that, please let me know. These are historic times when it comes to interest rate and obviously some of the fluctuations in the market. I mean, literally, we're seeing 1,000-point swings up and 1,000-point swings down in the equity markets right now, which is just absolutely unheard of. And also, if you are thinking about buying a home, it is an opportune time right now. The reason being is because with interest rates being at or near absolute lows, you are in a position to where literally you're going to be able to buy much more home than you would have been able to buy, let's say, 6 months ago when interest rates were higher. For example, if someone's looking at a $300,000 home, potentially now, if your budget was $300,000 6 months ago, now you can be looking at homes in, roughly about the $350,000 price range to roughly have an equivalent payment because interest rates are so much lower. So give me a call with any questions. I'm more than happy to help with anything. Again, Marcel with Guaranteed Rate, 972-672-3246, and I hope you have a great day. Thanks.